Folks, to say the market was excited about Shopify's third quarter earnings would be an understatement. The stock, as of the time we are assembling this video, is currently up 24% after climbing as high as a 27% gain off the back of strong earnings. So why the excitement? Well, the company met or exceeded both guidance and consensus estimates on every single metric measured. Not to be too cliche, but this is a name that's firing on all cylinders. Folks, we're talking Q3 earnings, we're talking Shopify. Let's dive in. All right, let's start right at the top. Shopify reported outstanding revenue growth of 26% in the third quarter, with top-line revenue climbing from 1.7 billion to 2.2, beating consensus estimates of 2.1. It should be noted here, however, that growth is in fact slowing, with Q3 2023 having previously demonstrated 25% growth. Breaking it out into segments, Subscriptions Solutions saw 26% growth year over year, coming in at $610 million, while Merchant Solutions grew 26.4%, coming in at $1.6 billion. Gross profit, meanwhile, came in at $1.1 billion, a 24% improvement from $900 million in the year-ago period. Operating income amounted to $283 million versus $122 a year ago, a 132% improvement. Net income totaled out at $828 million versus $718 last year, while net income excluding the impact of equity investments came in at $344 million versus $173 in the year-ago period. Free cash flow improved to $421 million, a 53% jump over last year's results, representing a free cash flow margin of 19.4% versus a margin of 16.1% in the comparable period. Shopify ended the quarter with cash and cash equivalents of $1.5 billion, along with marketable securities of $3.4 billion versus $1.5 and $3.5 billion, respectively, as of the end of the second quarter. Okay, so let's get into the metrics. If you followed Shopify for any length of time, you probably know that the tech company is heavily focused on using their own metrics to determine success. Referred to as GMV and MRR, they're short for gross merchandising value and monthly recurring revenue. Basically, it's a measure of how successful their tech stack is in being adopted by merchants. Gross merchandising volume in the third quarter grew by 24% year over year to $70 billion, while beating consensus estimates of $68 billion. Shopify president Harley Finkelstein, meanwhile, said that business-to-business GMV growth came in at 145%, their best quarter ever, while marking 5 consecutive quarters of triple-digit growth. At the same time, international GMV growth is said to be outpacing North American growth, growing at 30% year over year. Monthly recurring revenue, meanwhile, jumped by 27%, growing to $175 million from $137 last year, while beating analyst estimates of $174 million. And in terms of adoption, Finkelstein also stated that 16 enterprise launches occurred on Shopify's platform in the third quarter, which includes major brands such as Hanes and On Running. Other major labels, including Reebok and Victoria's Secret, are also said to be in the process of adopting the platform. And finally, there's the guidance. For the fourth quarter, revenues are again expected to grow at the mid to high 20% range on a year-over-year basis. Analysts, meanwhile, were calling for Q4 growth estimates of around 23%. Gross profit dollars are forecasted to grow at a year-over-year rate similar to Q3 2024, which for reference grew at a rate of 24%. GAAP operating expenses as a percentage of revenues are to be between 32 and 33% versus 36.5% expected, while stock-based compensation is to be in the neighborhood of $120 million. Finally, free cash flow margins are to be similar to Q4 2023, which for reference came in at 21% last year. Okay, so as we addressed in the intro, the response to the earnings results has been outstanding, with the equity jumping as much as 27%. However, as of Tuesday morning, as per Ramp Capital, it was still down 33% from the peak seen during the COVID-induced ZIRP environment. Others were a bit more excited with the results than Ramp, with Amit suggesting it's a company that will be around for a long time as more merchants use them to sell products online. User S Group essentially agrees, stating that the platform that has been developed by Shopify is dominant. Brad Freeman times 2, meanwhile, says it's exactly the type of quarter that the company needed given the recent expansion it's seen in its price multiple. And with any move, we also saw trading rooms and traders alike talk gibberish while claiming how successful they were in seeing things. And finally, QCap was cautious with the success, suggesting that whenever Canada's largest equity becomes a tech story, it's time to hit the sell button. I digress. It's good to see a Canadian tech success story. And based on Q4 guidance, the platform looks like it's going to continue to be a success story. Cheers to that. All right, everybody, thank you for watching. And I want to thank everybody who's been liking our videos, sharing them, commenting. We really appreciate it. We have added 800 subscribers in the last 30 days. We feel like a lot of that's because of this earnings season coverage that we've been doing and trying to find those stories that we think you, our audience, want to hear about and try to cover those earnings. So if you have any other companies you want us to cover, let us know in the comment section. And also let us know what you think of Shopify. Are you long? Do you think that it's a good short? Guys, let us know what you think in the comment section. I love you all.